Home prices went through the roof in January, up more than 8% year over year, and this is in the nation's largest cities. It's the biggest jump in prices since the summer of 2006. And that's according to the latest S&P Case-Shiller Home Price Index. Now, some of the cities that took the hardest hits during the housing collapse saw some of the biggest gains, including Phoenix, Las Vegas, and San Francisco, all with double-digit price gains. And joining us now, the co-founder of the Case-Shiller Index, Robert Shiller. He's also economics professor at Yale University. You know, Robert, a lot of people looking at these statistics, if you're a home buyer or home seller, will come away with some conclusions. If you're a home buyer saying, you know, maybe this is the time to buy that house I've been wanting to get because prices are going to go up. And if you're a home seller, maybe rethink holding off a little bit before selling because you might get a better price. So how should people strategize through this?
Well, it's very important to keep a distinction between the housing market and the stock market. Momentum is much, much stronger in the housing market. So the fact that we just set a record on the Dow means very little about the outlook for the stock market. But the increases we see in the housing market mean a lot. It's not as efficient a market. So this might be a time to accelerate a purchase of a home to get the increases that are likely over the next year.
Are you at all worried that there might be a repeat of the so-called bubble of the mid last decade?
Well, I don't think it's going to be as momentous as that one. That was the biggest bubble in the history of the United States. So we don't expect that to happen again. And in fact, in history, when we've seen big booms regionally in the United States, they've often not repeated for another half century. So I don't expect that, but it does seem possible that it would be a substantial bubble, and it depends on a lot of things, including political factors.
You know, Robert, we've been hearing anecdotally stories of a lot of people saying that investing in real estate, this is a good way to make some fast money, buying properties and then flipping them. Does that strategy make sense to you?
For people who know what they're doing, I think it naturally does. One thing that's changing is that, I don't know about flipping, I think buying it and holding it as a rental or selling it to someone who wants to be a landlord. We need to see some of our properties converted to rentals because that seems to be a shift, for now at least, in public demand. So I think it's a natural economic thing to be doing right now.
As you take apart the housing market or you analyze it, what's making prices go up so much?
You know, usually we don't know the answer to that even after the fact. But I'll give you the first thing that comes to my mind, the Fed, okay? Very low interest rates. In fact, in December, we set an all-time record low mortgage rate. It was 3.35%, and it's not much up from that today. That matters. You know, that is, for buying a house, it's that low mortgage rate that might be the more important factor than the outlook for home prices. That's big, to be able to borrow so cheaply and lock it in for 30 years.
Yeah, that is pretty incredible. Can you talk us through a little bit on some of the numbers as you look at the metro areas of the cities on your list? I mean, they're going to pull up a graphic here. Phoenix was up the most year over year, 23%. San Francisco, 17.5%. Then you look at the bottom of the list, New York City, up just 0.5%. What kind of conclusions should we draw from looking at these numbers? And what's the story behind the numbers?
Short run, go for Phoenix. Long run, go for New York. By the way, the financial sector is very low priced now, too. You know, New York is the world's financial sector, and it looks beaten down right now. But my feeling is that that has a good, strong future.
Let me get you, as a student of value, to comment, if you would, on the values in the stock market today. Do you think the market is priced too high for the economic underpinnings?
It is priced highly. I have my own CAPE index, or cyclically adjusted price-earnings ratio, which uses a longer average of earnings. And that ratio now is about 23, which is high. But then you've got to remember that interest rates are very low, so it's not unnatural for that to be high. So what I'm thinking is, based on just the CAPE ratio, the real return on the stock market for the next 10 years might be something like 3% a year, which isn't bad in the current environment. That's way better than your 10-year Treasury.
All right, we'll leave that for another conversation, but thank you so much. Robert Shiller, co-founder of the Case-Shiller Index, also economics professor at Yale University.